Okay, everybody, this is the Option Professor, and I welcome you to the webinar here where we're going to be discussing precious metals and industrial metals. And I think this is a sector that might be very interesting looking forward. So that's why I'm doing a little special meeting on this. Quick background on myself, the Option Professor. Been doing this for over 40 years, and I've educated thousands and thousands of investors worldwide and nationwide in our option seminars. So obviously we have a certain amount of knowledge in this area after 40 years, and we're going to share that with you here today and invite you to contact us to ask your questions after this is done. Okay, so today in this section, we are talking about precious metals. That means the gold and silver. And then, of course, we'll get into the other metals of copper, industrial metals, and aluminum and stuff like that. So let's talk with the gold. Okay, we've been very, very good with the gold, in my view, because we have basically let the prices dictate our activities, which is always the best thing to do. So you can see gold, this is a 20-year graph on gold. And when the red line is rising, you can see gold has done pretty good. And when the red line's coming down, it doesn't do so good. And so the red line turned up here in 2019 or so at about $1,200. And obviously that was a great time to be in. Now, when it gets way away from its moving averages, like it did at 2,100 almost, it's not if it's coming back down to revert to the mean, it's when. And obviously it reverted right back to the mean, which was the 24 SMA. The low on that day was, the low was 1673. And look where the 24 was, 1666. That's pretty good. That's pretty close, right? So that's why it stopped there. And now it's come back up. It violated it a little bit here, but if you notice when the green line is rising, that's the thing to stick with. The red line got a little sloppy, but never really pointed down. I mean, I don't consider this is like a little bit down, but not enough. Down looks more like back here in 2013. Now that's down, and there's no debating it's down, and that price really dropped down, right? We didn't really get that over here, so getting a little hot to trot to sell it was not the brainy thing to do, because you got the blue line rising, you got the green line rising, and the red was barely dropping. So that's no big sell signal at all. In fact, it's just telling you that you're having a dip, which is what it did. Then when it gets way back up here again, right? First of all, your RSI is 83 here. When you came back up the next time, the RSI was only 60. That is a fantastically huge divergence. And that's why we were telling people this is not someplace to buy, but in fact to sell, because it's running out of steam. You see, first time up, what's the RSI? 83. Second time up, what's the RSI? 60. That is a fantastically large divergence. And from that large divergence comes a fantastically large drop, all the way down to 1,600. Okay, it took out all the averages, so obviously it wiped out all the longs, right? And then basically it held the purple. Look how the purple comes in here in 2015. Buy it against it, buy it against it. Great times to do it, right? We never really got down here to 1,500. You know how you get to 1,500? You get to 1,500 if this thing starts breaking under 1,800 and that red line starts pointing down. If that happens, 1,500's in the cards. What would make gold drop to 1,500? The dollar gets very strong because we go into a recession. Interest rates get very, very high because these consumers are spending money like drunken sailors, and the demand is so high, the job market is so hot, retail sales is so hot that the Fed has to go much higher to get the inflation down, because ultimately our opinion is the Fed is going to be moving the 10-year note above, and Fed funds above, the inflation rate. And now the 10-year note is still under 4, and our lovely Fed funds is only at 4.5. Inflation is still at almost 6.5. So unless inflation makes a break for the exits, these interest rates may go higher than people even imagine. And of course, if they do that and they choke off the economy and cause a recession, and they get people tight for money, money becomes scarce. The banks don't want to lend. Yeah, that's already started. And basically that causes a contraction. Again, you would break this 1,800. You would get under there and close. And once that happens, who knows how far it would drop, because all these people that have been buying above 1,900 and 1,800, they may say, get me out of there. And then, of course, if you have no bids, That's how you get a big drop. And the purple line, which is really where the big support has been in the last 20 years, may be tested. So I'm not saying that's happening because, again, we're not under 1800. But if it starts happening, I'm not going to get a faraway look in my eye. I'm going to act accordingly. Okay, so that's your story on the gold. 1800, a huge number. And again, one thing recently we said when we're up here at 1960, we said, don't buy it up here. Why? Because it's going to revert back to the mean, because you see there was a gap. You see the gap there? We said there was a gap, and the high in the gap was about 1826, and the low in the gap was about 1835. So this week's low or last week's low was 1818. They closed the gap, and now they're at 1850. So, or 1843, whatever. As long as now that's a good sign if you're bullish. We don't take out 1800. We filled the gap. And now let's look at the shorter term graph. And the one and the monthly again has to get back above 1860 and 1870. Because look at that. That thing is like that purple line is like a big resistance zone. But the RSI is still hanging in there. So if we can get back above the red and get that red pointing up, which is 1852. So it doesn't have to do too much to get that. And we can get above 1870, then we're back on the bicycle. Look at it on the 1 year. Again, we're right down to the purple line. So there's your buy signal right there. Buy signal came from filling the gap at 1825, and the buy signal came from testing the purple, which comes in at 1835, not coincidentally, right? And so 1835, 1825, those are pretty good support zones, right? And obviously the low was 1818. So basically you're looking at, or 1827 to show here. Bottom line is, I don't like that red line pointing straight down anymore. That's not good. See, that's definitely pointing down. So on a 1 year basis, and you're under 50. But if you notice RSI, here's another one on RSI. It is still hanging around 40. If they take this number out, 1835, 1825, and then they take out 1800, this thing starts breaking under 40 substantially. That's when the market can accelerate to the downside. So that's why the RSI is in a very key area, about 40. The gold prices, 1800, 1825, very key area. And so this is either the support of which we will bounce out of and get going again, or it's right where the dam breaks and people start flooding out of the thing. So I think it's very exciting to see how this thing is gonna go. Okay, so keep an eye on the gold because it's pretty much got some pretty important numbers around it right now. Okay, let's take a look at the silver, and then I'll get into some different stocks. Okay, here you go. On the 20-year graph, let's start out with the 20-year, see what that tells us. All right, so as long as we stay above 20 bucks, okay, that's important. And 21 bucks, that's important. But again, gold getting above 1960 and silver getting above 25. If people want to be patient and wait for that and then see if we get a parabolic move, that's not the worst idea either. Because you know what? It's nice to be in there when things are moving fast in your direction, as opposed to being in there and watching paint dry or be concerned that it's going to fade and crack on you. So again, for those of you into momentum and getting involved in more of a momentum situation, 1960 and 25 bucks are key numbers to get that happening, I think. Okay, so we're talking about the silver. Again, RSI is right at 50. So again, right now it could be just like the gold at a very important point. 2143, that's your red line. So it's trading above that. RSI is right at 50.49, so it's important. And the purple has been violated, but now it's back above it. That's a good thing. And the blue comes in at 2271. So you get the back above 2271, 23. Those are good signs. And holding 21 and 20. So that's really the key lines in the sand for us as far as that's concerned. On a 1 month basis, again, similar to the gold, it's got a very big line coming down. And again, you need to hold this 21 bucks, 21, actually, yeah, 21.60. Got to hold it. And on the 1 year, again, just like the gold, that thing's pointing straight down. That's not a great sign. It's under purple. That's not a great sign. But you do have a low surrounded by higher lows. And your RSI, when we hit this low here, the RSI dropped to 38. When we hit here, the RSI was 33. When we hit this low, the RSI was 33. And when we hit this low, the RSI was 35. So there's a little bit of a divergence, which might indicate a little bit of exhaustion. So we keep an eye on this, but we know the numbers. 21 and 20 on the downside, you got to hold. 23, 24 on the upside, and then 25, and then you're on the bicycle again. Okay, let's start talking about a couple of different stocks. The leader in the gold is always going to be this, the big one, Newmont, and they're just trying to buy somebody, but I think the guys said they didn't want to get bought or something like this. Now, this thing was a very good one for us because, again, we got involved with this thing here in the one we got a buy signal here at the 35 mark, okay? And then we had a big run towards 75. Then it came back down and tested here at 50 something. Then we got another big run. Now, what did I say when I said another broadcast? When prices on anything get way away from the moving averages, it's not if it's coming back down, but it's when, because they revert to the mean, Same thing down here. You went down to 38 bucks. The averages are up at 55. You think it's a coincidence that it came back up and reverted to the mean? I don't think so. Again, it is looking like it's having a hard time with the RSI. It went up towards 50 and now it's back down. So this thing is definitely still on the defensive unless it gets above 55 bucks, and then it would look more interesting. And obviously it's testing the purple right now, which comes in at 43. And where's the market trading right now? 45. So this neighborhood here had better hold, because if it doesn't, something's happening with gold, and people are, going to be pretty surprised if it does collapse. But again, this would be a neighborhood of support, just like the gold at 1800, and this would be a neighborhood to monitor to see if it holds. Okay. Okay, so there you go with that. Another big one is called Barrick, and Barrick. Let's take a look at Barrick on a 20-year. Okay, Barrick's in tough shape as well on a 20-year. It's got to get above 20. A lot of resistance there. So but again, you bottomed here, you you rallied, you pull back. So if you get above the 21 area, again, there is a lot of real estate there. So this could be what we call the Missouri state, the show me state. Let's see if we can get above that resistance, because if it does that, it'll also get that RSI back above 50. So right now, do it with the show me state and see if this thing can start going. Because when you get into this stuff, I don't know how you guys feel, but I like to see if we're going to get big potential. Like when we get a buy signal at 10 and it goes to 30, that's nice, right? When this thing is pointing down and you get a pop of $5, not too exciting, particularly if it's a false breakout and then they tank it on you, right? So, sometimes patience is a good thing. Sit on your hands. When the timing is right, when the red line's pointing up, you'll be happier if you're bullish. All right. Another one here in the gold, the smaller stuff would be Yamana. And these are the smaller guys. And Yamana, looking pretty good. We thought it looked very good when it broke above 450. Again, it went up to 650, had some trouble. Now it's starting to be tested again. RSI is still above 50. So you keep an eye on this thing because it does have some potential if it gets moving. And another one on the silver that's smaller is Pan America. And again, that's also, again, looking like the silver, which means what? It has wood to chop. But again, it's not at 40 anymore, went down to 14, but you got a lot of resistance here. So that's why it's having a hard time getting going. And the RSI is stubbornly under 50. So again, above 20, very interesting. gets more interesting above 20. Let's see what it looks like on a 1 year. Yeah, you see a lot of resistance, sloppy looking, red lines pointing down. So these metals, they're at crunch time, and if this Federal Reserve really is going to get inflation down to 2%, these things could be casualties if they're going to be successful. They haven't been successful yet. No traction, really. Those hikes have been going on for a year, and everything still costs a lot, and people are still running around like drunken sailors in restaurants and bars and traveling and everything else. So, they've hardly achieved the goals of the Fed, and that's why those inflation rates aren't breaking like people were thinking. Okay, let's see what else we've got here on, gold fields. Okay, looking at a 20-year graph on it. And again, it gave us an idea that something might big have been going on. Obviously, it gave us the signal down here on the red line when it hit 4. I mean, when it was at 2, and then gave a little bit of a sell here at about 10. Then back in again for this. But again, when you get far away from the averages, you're coming back down at some point. And now this is a $10 a share log jam, and an RSI at 50. So talk about something that's going to make a decision one way or the other. Again, if you start taking out 14, this thing could open up pretty good and run pretty nicely for you. The purple line comes in there at 8. So that's always a possibility of going down to test. But the red line's not really pointing down that sharply. So that's not bad. It's holding the blue. That's good. And the RSI is right at 50. So on this particular one, it looks like it might be a situation where it'd be worth to keep an eye on it, because as long as it doesn't break under 10 and 8, and the RSI can maintain above 50, there's still some potential here. So a lot of the gold stocks definitely are in a situation where, and the silver, where they're, they need more price confirmation to really be great. Again, we got signals on them a while back. I'll give you the 1 year on this thing. This thing, again, gave you a buy signal here back in November. And look, you got a big spike. Then, of course, you got to expect to come back down to the mean, which it did. Then it got back above here and gave you a nice little signal here at about 1050. Again, gets ahead of itself at 13. And then basically gave you the sell signal up here at 12, and it's still on the sell signal now as far as the 1 year is concerned. Let's just take a look at divergence. Yeah, you see, look at this. First time up here, we were at 79 on RSI. Next time up here, we were at 75. Not that much. No, so the divergence thing really wasn't a big deal. So, but again, the red line is a big deal. When it's pointing down, that's not a good thing. All right, so we talked about the precious metals, gold and silver, and give you a few different ideas on what to keep an eye on. Now we're going to turn over to the industrial metals, and we're going to start out with the price of copper. So let's put the price of copper up there, and then we'll talk about the things that are going on here. Okay, you go to the 20-year graph on copper, and we were very keen on copper. I'll show you the Freeport McMoran in a minute, but again, on a 20-year basis, the purple line is rising. That's a good long-term thing. Look where it hit the purple. You think it was a good buy at 320? I mean, come on. And then basically what? You're looking at right now, it's a little bit overbought, and it's probably going to come back to the mean, which is trying to do. The red line has not turned up. So this could be a false breakout. It's now, if it gets under the green, which is what? 413, and we're at where? 417. So if this thing starts breaking under 413, that would be worrisome. And certainly if it breaks back under the red line, which comes in at 392, that would be worrisome. And it would open the door for another test of this stuff down here. What's your RSI doing on the 20-year? It's at 56. Our view on RSI, if it gets above 60, you can start accelerating to the upside. If it gets under 40, you can accelerate to the downside. Just a little bit of our opinion on RSI. Some people say, well, when it gets above 75 or 80, that's way overbought. Hey, way overbought can last a long time. When you get way away from the moving averages, that tends to not last as long. With regards to underneath, RSI is under 40. It means it's, gonna go back up, not necessarily because it can stay oversold for a long time. All right, so there's your copper. And now let's talk about some of the stocks that have to do with industrial metals. And industrial metals is a play on obviously the industrial sector, which has obviously got some good activity going in it. I'm going to show you a couple of stocks in the industrial sector in a minute. And basically share that with you. But let's go over here, Freeport-McMoRan. Okay. And again, Japan's industrial stocks seem to be doing good. European industrial stocks keep doing good. So there seems to be a little bit of a renaissance in the industrial sector. Our bridges and tunnels and roads are lousy. So obviously even Republicans and Democrats can agree, you got to fix the bridge and you got to fix the road, right? So that shouldn't be a hard one to get through. All right. So we got Freeport-McMoRan. We're going to show you that. And we'll show you how we viewed it in our research. Okay, can you see right here when it turns up? Okay, that's when you put it into your IRA and you leave it alone, right? And so basically you got a huge move up. Then it comes back and reverts to the mean, right? And if you were going to take a shot, since the red line's still pointing up, that's where you take your shot. Then it goes up here. Now, obviously, it's going to revert back to the mean. This one was a more of a significant reversion. And let's take a guess to see if there was a divergence on RSI here. Your high point on RSI here is 84. You want to make a bet that that new high didn't have a higher RSI? 84. What's the new high here? 59. When you get a huge divergence, you generally will get a huge correction. And that's exactly what happened here. Okay, so again, we're hugging the blue. This is the time to take your shot at 50, at 25, right? And now if this baby gets back underneath 37, that's going to be no good. Okay, so we could go into a corrective phase if that occurs. And again, the RSI is still above 50, but with the RSI under 60, an acceleration to the upside right now is not in the cards. So again, like everything, it could pull back a little bit, because if the Fed goes too far and we go into recession, because again, landing this kind of plane is like landing it on a picnic blanket. I mean, it's not easy. And the Fed is finding that out. And they were awfully wrong about transitory, and it looks like they're awfully wrong about disinflation as well. So we'll have to see if they're ultimately correct on anything. But being incorrect means higher rates, and higher rates could lead to stronger dollar, which leads to slower economy, which could lead to a tougher time for this stuff. So you got to keep, you always keep balanced out there. No matter what your opinion is, remember the other guy has a different opinion. You better listen to it and show some respect to it. Okay, so that's your Freeport-McMoRan. And if you look at your shorter term stuff here, you can see that the red line is definitely pointing down, not dramatically. It looks like it almost is at the same angle as this guy here. So if we can get back above the 43, 44 area, then again, this would be better. So keep an eye on that number, 43, 44, big number for Freeport-McMoRan. And of course, we said 36 as well, 37. Okay, let's look at the other one here, which was SCCO. These guys pay a pretty good dividend. So does Newmont Mining, by the way. So if you want to hold on to a metal and get paid a dividend, Southern Copper and Newmont Mining are two to keep an eye on. Okay, so this thing is flattening out, no doubt about it, but it certainly looks better than the copper graph as far as steadiness is concerned. Again, this thing gave you the buy signal at 48 bucks and pretty much has been rising ever since. The blue line has never not risen. So again, it does have potential to pull back towards 72, but as long as it can hold the 72 number, it won't open the door for this. This down here is only concerning because, again, as a moving average, it is an attractor, and there are gaps down here, and that's an attractor too. So you got gap at 68, and you got gap at around 65. So if it does break underneath the 72, you get a little bit of an idea where some of the landing spots could be. Okay, so keep an eye on that because and let's just look at what kind of a RSI here. RSI was 76 on that move, and over here it was 59. So again, it could break to the downside because that's a pretty good divergence. You got 76, and then up here you're at 59. So that's a pretty big divergence. So be careful here. If it does break under these numbers, again, a full correction might take it to fill these gaps. So you got to be careful. Okay, now there are the industrial metals that deal in stuff like what do you call it? Copper, not copper, but iron and stuff like that. So let's take a look at some of those. Vale, VALE. These guys are heavily connected to the people that make the batteries, and so you want to get into something with the electric vehicle angle. This might not be a bad one to take a look at. Looking at the 20-year graph, it looks very interesting to us. But again, let's see how far back this goes. Maybe we'll get a better. Now you do have lower highs there, so you're going to have to take out 20 to get this thing really going, and you got to hold 16. And RSI is getting a little weak looking. Let's look at the 5-year. Yeah, this is a pullback. You're having a pullback. Again, way away from the averages, come back to the mean. So you want this baby to hold 16 and 15 area, 15, 16. You want that to hold. And basically, to get back on the bicycle, you'd like it to get back above the red line, which was the high, which is 1725. So let's get the thing above 1725, and maybe that'll get it going again. Or you got to think it might pull back. And where's the RSI right now? It's at 54. Now, if you get RSI breaking above 60 and you get this thing closing above 1750, 18, it could be making a run after 19. Again, 1-year graph is pointing down, so that's why you're getting the correction. It's holding the purple so far, so that's where we're saying 1615's got to hold for this one. U.S. Steel had a big pullback Friday, but it gave us a buy signal a while ago. Now this thing here, that blue looks like it's rounding up. The purple and everything else, I mean, seems to all be meeting at the same price, which is around 25 bucks. So you got about 3 things coming in at 25 bucks, which is only $3 away. So you want it holding that. You want it holding that. And the RSI is above 50, but it's, again, if it got above 60, then this thing could really start accelerating. So keep an eye on it. But again, it is pulling back a little bit. Our first buy signal on this in the last year came in down here in the 20 area, and then it got sloppy, got another one at 21, got a big run up here to 26, got sloppy, and now it's getting sloppy again. Okay. RSI pointing straight down is never a good thing. And it has broken under 50. So again, this number here is very key, which is right around that 25 bucks. You definitely want to see if it hold that 25 bucks. Okay, Cleveland Cliffs is another one. Let's take a look at Cleveland on a 20-year, because that one was looking interesting. Okay, again, if these things get going, there's quite a bit of upside to them. So that's why steel and cliffs, you got to keep an eye on them, because they do have potential. You can see in years past, sometimes they go a little nutty. So keep an eye on them and follow the trends on that. And the last one is Alcoa Aluminum. There was some news on that on Friday. We'll have to see if the aluminum prices went up very sharply because of some problem with some aluminum factory or something. So again, this thing came down to the lines here. This is the time to buy it at 35 bucks. Now the red line is pointing straight down. That's not so good. So we could still correct and revert back to the mean a little bit. Closes above 60, opens up the door here quite a bit. So keep an eye on Alcoa, and again, get some details on that. Now, again, we went briefly over quite a bit of metal talk on precious, gold and silver, and also on copper and the industrial stocks. But there's a lot to learn on the options on them, and there's a lot to ask about, timing on them. So we're inviting you to give us a ring and go over to our website, optionprofessor.com, OPTION, professor, PROFESSOR.com. Put in your information and you'll speak to us directly. And we'll explain how we can help you with not only the option trading and what strategies you're using, but also the timing and some of the other inputs that we give you, not only on the metals, but other markets as well. Very critical time on some of these markets. So I encourage you to go over to the website and submit your information. We've been doing it for over 40 years. Obviously, we got a certain amount of product knowledge here, so we are willing to share it. So submit your information and we can talk to you directly. Okay. All right. This is the Option Professor. Thanks for listening. Again, this has been on the precious metals, gold and silver, and the industrial metals of copper and some of the industrial stocks. There are in the industrial sector, I'll just spit out a few quick ones here for you so that you can keep an eye on them. ETN, PH, ITW, CMI, to keep an eye on a few of those as well, because there seems to be a rotation into that area. Thanks a lot for being with us. Go to the website, submit your information, and we can slow down and we can talk to you at a much slower pace one-on-one. Okay? Thanks for being with us today, everybody. Have a good day.